All right, guys, welcome back for another video. In today's video, I want to talk about the largest Bitcoin wallet address in the Bitcoin space. Now, nobody knows who this is, but whoever they are, they have a larger Bitcoin stack than Michael Saylor does. That's roughly 138,000 BTC, 138,753 BTC to be exact, and that comes out to roughly $2.6 billion. So what I really want to talk about in this video is kind of the accumulation and distribution and how it affects the price chart in Bitcoin from a large wallet of this size. Now, if you look at the accumulation distribution here, you can tell that whatever entity this is, they have a very long history of accumulation. Now, they recently flowed through to a different address. While this address only has a few months of history, that's because the balances were transferred to this new address. But if you follow the string of addresses, you can tell that whatever this entity is has a very long, multi-year history of accumulation. And you can see that the accumulation far outweighs the distributions. But whatever this entity is, it does appear that there's not really a pattern to their accumulation, right? It's almost like whatever entity it is just dumping free cash flow into, and converting it to Bitcoin and putting it in this wallet. Now, the distributions are a little bit more surgical and a little bit more precise. For example, you've got this 1,000 BTC block right here, 1,000 BTC block right here, and then two 500 BTC blocks roughly together for roughly 1,000. And again, another 500 block down here. So you have these very surgical forms of distribution, which to me indicates that this is probably something occurring for accounting purposes, or maybe quarterly recording or quarterly reporting. If it's an institution, maybe they're shoring up their profit and loss, or doing this type of behaviors for some type of accounting reason. Now, if we go to the price chart, what I really want to look at is the effects that this wallet's distribution, just this one single wallet, has on the price. So if you go here, you've got October 5th, 2022, 1,000 BTC distributed, roughly $20 million. This probably flowed into an exchange and hit the market as sell orders, and you get a local top right here, right on October 5th. These distributions hit the market, boom, local top. Now, if we go here, you've got this distribution here, 2022, September 12th. Remember, September 12th, 2022, 1,000 BTC probably hit the market in the form of sell orders. And if we go right here, Monday, September 12th, 2022, what do you know? You got a local top right here. Squeeze up, and then this 1,000 BTC on September 12th hits the market. There's your Monday, September 12th, 2022, local top right there. And if we move over here, you've got Thursday, the 28th, July 28th, 2022. If we go down here, you've got these two block transactions, one coming in the 26th, the final one coming in on the 28th for 500 BTC, roughly $22 million total, probably in the form of sell orders hitting the exchange all at once. And what do you know? Well, you don't exactly get a local top, but you can see that the sell pressure's in here at this point, right? It's essentially a local top, right? If you were to go to like a weekly, this would look more like a local top. You do get one final thrust above to grab liquidity, but again, this whale basically unloaded 1,000 Bitcoin at the exact top right here. So hopefully I've illustrated that concept well. And what I want to tie it into is the concept that is really important in trading is that, whatever indicator and whatever strategy you're using, right? All our fundamental analysis, all our ideas about the market, every single piece of information that we can generate about the market it can't account for one simple fact, and it can't account for the fact that at any moment a billionaire somewhere in the world can pick up the phone and call his broker, right? And there's no way we can predict what he will say to his broker. And I think this is a really good illustration of that, right? We, you know, yeah, we can kind of get a sense for the probabilities that exist given the patterns that have played out previously in the market. But at the end of the day, hopefully this illustrates the inherent concept of randomness that exists within the market and operates within the market all the time. It's probably a little bit disconcerting to see something like that, right? Where, because we can't forecast when these whales will dump, we can't control when the whales will dump. It's sort of we're sort of at their will in that sense. So, you know, with that in mind, I think it's really important to, rather than focus on what has happened previously in price, and focusing too much on historical price action and trying to draw interpretations and predictions about what that historical price means for the future, I think it's a much better strategy to kind of try to stay focused on what is happening right now, right? What's currently happening in the market, because things can change very quickly, right? That billionaire can pick up the phone and call his broker and tell them to do something totally different than what you had in mind, even though it totally contradicts all the macro information, all the technical information. None of that stuff matters when those huge orders hit the market. And again, I just thought this is pretty cool, just following this address. Again, nobody really knows who this is. Everybody talks about Michael Saylor, but whoever this entity is, they're bigger than Michael Saylor. Anyway, I'll leave it right there. I hope you guys like this video. If you do like this content and you haven't subscribed already, please just make sure to leave us